Nvidia shares are down once again in the pre-market today. Investors cooling on the AI giant in the latter part of last week. This morning, you can see the stock off by about 1.8%. Still, month to date, the stock's up 13% and a much bigger run if you're looking year to date or the last 1 year. Joining us right now with his take on the stock of the moment is Ray Wang. He is Constellation Research founder, chairman, and principal analyst. Hi, Ray.
Hey, good morning.
You've got a $200 price target, and you say there's an entire list of 7 reasons why you are convinced this stock is going to get there. Why don't you lay out the broad argument?
Well, Becky, there's 7 modes that are important on why the stock will hit 200. First is a visionary-led CEO, and that's very, very important. As you've seen in the Valley, those are the ones that have led, like the Larry Ellisons of the world, the Scott McNeelys, the Mark Zuckerbergs. The second one is the high barrier to entry. There's few competitors that can come into this chip market, and it takes a long time to get a chip to market. And if you can do that, and if you succeed, and then if you can actually get the right chip, that's a very, very hard thing to do. The third one is high switching costs. Once you're in, you're locked in because of the CUDA software. To access the chips, the software, and the entire stack, you're going to be locked in for quite some time. And they've got quite a lead in terms of doing that. And of course, NVIDIA's had dominant market share. And I think that makes a big difference because they've been in this market for quite some time. And the competitors are behind by 24 months. And then, of course, we're only seeing 1/10, maybe 1/100th of the product roadmap that NVIDIA has out there. And that's really exciting for those who actually have some insight into what they have next, because it's more than just chips and it's more than just what's happening in software. That ability to go from silicon to all the way to the end side, that's where we're going to see a lot of the innovation. And of course, the ecosystem has made the GPU a default standard. It's the standard of everyone's looking to for AI, from inference and testing. And of course, the numbers don't lie. I mean, we're seeing some amazing growth here that actually matches the PE ratio, and that's what everyone's looking at. They're trying to figure out how this is going to continue, but gross margins of 78%, 262% growth compared to a year ago. This is going to continue for at least the next 18 to 24 months.
Constellation Research founder and principal analyst Ray Wang recently put an extremely bullish $200 price target on Nvidia stock, bringing some good news for Nvidia investors who had been struggling lately because of the sell-off the stock experienced. As of the time of this video, Nvidia stock is trading at around $118, so Wang's price target implies a massive upside of nearly 70%. Not only that, as it also implies a market cap of nearly $5 trillion. So in today's video, we're going to talk about the 7 reasons why this analyst thinks that Nvidia stock will hit $200 and why investors should be buying Nvidia stock on the dip. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market. So click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
How do you describe the pullback over the last week?
Oh, the pullback is coming at a macro level. People are worried about the consumer side. People are worried about where the economy is going to head, and they're doing some profit taking before the summer. So I think it's a good time to buy the dip.
Ray, there are some people who look at this and say, okay, this is the equivalent of what we saw with Cisco back when the internet phenomenon was taking off in the late 1990s. How is this different?
I think this is different because when we were looking at Cisco, when we were looking at where Intel was and where Microsoft was, that era was really built on those 3 companies. I think NVIDIA has learned from those lessons and realized that they have to go much broader than just being a separate company building just chips. What NVIDIA has done has built partnerships that are going to last the next era. And so in the age of AI, we actually believe AI begins and ends with NVIDIA because they've actually built out a roadmap that is much more encompassing than where networking was or where software was. They actually see that end-to-end vision, and that's one of the interesting things with what we see with Jensen's overall vision.
Today, the stock's at 124. Your price target, $200, is the next 12 months?
It's the next 12 months, correct.
One of the very first things that analyst Ray Wang focused on when talking about why he was bullish on Nvidia is the company's very own CEO, Jensen Huang. Wang said that Jensen was a visionary poised to set the chipmaker up for continued success, and that every great Silicon Valley story starts with a great leader. He also talked about Nvidia's incredible positioning, saying that the company has developed a high barrier to entry in the industry. It takes a long time to get a chip to market, and there are very few competitors who are currently able to offer something that can compare to what NVIDIA is doing. So Wang believes that legitimate competition is going to remain scarce. This is evidenced by NVIDIA's 80% market share in the AI GPUs market, and it won't be an exaggeration to say that the company has the means to stay ahead of the competition for years to come through continuous innovation. For instance, NVIDIA's main competitor, AMD, spent $1.5 billion on research and development last quarter, while NVIDIA spent $2.7 billion. Remember, NVIDIA is already the market leader as it has the best tech on the market, and it's still outspending AMD almost 2 to 1. On the other hand, another competitor, Intel, is outspending both NVIDIA and AMD at $4.4 billion last quarter, but this spending is putting Intel in risk, and it's very likely that the company will be unable to keep this up, reporting negative free cash flow. NVIDIA's dominant position over competitors leads us to the analyst's next point, which is the high switching costs required to switch from NVIDIA to another competitor. Once a company starts using NVIDIA's GPUs, it gets onto NVIDIA's CUDA software platform. So, in order to gain access to the chips, the software, and the entire stack, companies are going to be locked in for quite some time. This is why Nvidia stock is way more than a chip stock. It's an ecosystem play that could definitely reward patient long-term investors, and we're going to talk about why we think so right now. Hello everyone, and welcome back to Investocracy.
Welcome back to the watch list. Time to discuss everything NVIDIA. What do we need to know for this name? Because we saw the AI leader surpass the $3 trillion in market cap, take over, right? Some of the other biggies like Microsoft and Apple, but now the big pullback. Is there opportunity here? Let's bring in our panel. Jim Kelleher, Director of Research and Senior Technology Analyst at Argus Research, and Paul Marino, CRO at Granite Shares. Let's start with you, Paul. Some of your thoughts of what's going on here. When you see a pullback and you see NVIDIA under $120, do you say, I want to buy in?
If you're a believer in NVIDIA like we are, I think you buy the dips. AI is the future. The purest play out there is NVIDIA. When you think about their market share, they have their GPUs have 90% of data centers,
right.
80% of all AI chips, and that is going to grow substantially over the next 5 to 10 years as they build out all this AI technology. So from my perspective, any kind of pullback may be an opportunity to get in, and historically, anytime NVIDIA's had a stock split, the share price has gone down afterwards, so it's always proved to be a good investment long term.
NVIDIA has successfully managed to create an ecosystem of products which makes its GPUs the default standard for AI, inference, and testing. And what's even better is that the company is expanding its offerings now on an annual basis. According to Ray Wang, we're only seeing a very small portion of the product roadmap that NVIDIA has out there, and that's really exciting for those who actually have some insight into what they have next, because it's more than just chips. Let's also not forget that NVIDIA's numbers don't lie. The company's earnings have been able to keep up with the remarkable surge in NVIDIA shares over the last 2 years. In fact, the analyst highlighted the 262% revenue growth and gross margin of 78%, and noted that he expects NVIDIA stock to surge over the next 18 to 24 months. He also talked about the current pullback, saying that it should be considered a buying opportunity for investors. But when he said this, the stock was trading at above $120, and now it's below that. So is it still a buy? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Look, Jim, when I look at that 10-for-1 stock split, people were getting very excited, and I think they jumped in, and then you saw it go to 140, and then you have this pullback. Do you see opportunity here?
Yes. Hello, Nicole and Paul. I certainly do. When you think about how long NVIDIA has been on the rise, I mean, we have lots of portfolios where the cost basis in NVIDIA is, we even have some where it's below $1 per share, and none of our portfolios it's above more than 20 or 30 per share. And so many investors are playing with house money with their NVIDIA shares. They're not going to treat a 5 to 10%, or we're getting a 15% correction here, as an opportunity to run for the hills. They're going to be doubling down and adding to positions because pretty much everyone is in the green on this stock right now. So again, yes, they have this is the second time they've split their shares in a short period of time, but it just has really created a broader pool of investors who can get in on this very exciting idea.
Since Nvidia announced its stock split, the stock is up 33%, despite the fact shares have retreated from their peak over the last week. But after one of the most incredible runs in the history of the stock market, many are now wondering if Nvidia stock is still a buy. So let's take a look at Nvidia's valuation to find out. Nvidia boasts a PE multiple of around 70. So if you compare that to the PE multiples of Nvidia's main rivals for the world's most valuable company title, Microsoft and Apple, you'd think that Nvidia stock is overvalued as the other two tech giants have PE ratios of 39 and 33, respectively. But here's the thing. The PE ratio isn't the best metric when evaluating a company that's growing as rapidly as Nvidia. In fact, despite the company's already massive size, it's still growing at triple-digit rate. The price-earnings-to-growth ratio, or PEG, takes this growth into account, and traditionally, a PEG ratio of less than 1 is considered undervalued. Of this trio, Nvidia is the only stock with a PEG ratio below 1, meaning its current valuation is much more reasonable than PE alone would show. Keep in mind, though, that no single metric will give you a complete picture, as the PEG ratio relies on growth forecasts, which are far from guaranteed. Still, Nvidia has already shown it can scale rapidly and grow revenue at a blinding pace. Sure, some might say that Wall Street has high expectations for Nvidia, and this $200 price target might be considered so, but Nvidia's own expectations for itself are quite ambitious. In fact, for the fiscal 2025 second quarter, Nvidia is forecasting $28 billion in revenue, which would be an 8% increase from the previous quarter and a 107% increase year over year. Most companies would kill to see those kinds of numbers. Remember, these results are only possible because the demand for Nvidia's chips is still incredibly high, and the company has yet to encounter true competition. Other companies, like AMD, are developing chips to cut into Nvidia's market share, but at the moment, they have a lot further to go. Nvidia has been one step ahead and is promising a development cycle that AMD will struggle to keep up with for several reasons, not the least of which is that it spends nearly twice as much as AMD on research and development. The broader demand for AI that's driving Nvidia's success doesn't seem to be slowing down, as PwC believes AI can add $15.7 trillion to the global economy by 2030. That means there's a long way to go until demand slows down, and Nvidia stock still has room to run if it can defend its market share. Therefore, the current dip is a perfect buying opportunity for investors who are interested in Nvidia stock. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.